Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Vick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Vick here. To buy the dip or not to buy the dip? That is the question on today's show. We'll obviously just sort of talk through yesterday's action, what it means going forward, both for today and as much as we can possibly extrapolate for the next couple of days or weeks here. It's just a weird market to be in. But on top of that, we do have some individual news as well. So we have earnings from Tencent and Take-Two Interactive. A couple interesting ratings today. Bitcoin, of course, doing what it's doing. So I'm sure we'll talk about that. And we'll talk about the shipping wars with Walmart and Amazon and more. Let's jump right in. Joel, what's the word here overnight?
We got some green on the screen. Week close, a little fall through to 27.99.75, just under that psychological 2,800 level. And then we caught a news when Mr. Trump talked about positives of a deal with China. Again, here we go again. We rallied all the way up to 2831.50. Not a bad number, but for me, I'd really like to see us take out 37.75. That was the intraday high from Monday. I don't know if we got the gas to get there, but that's my big target on the upside. On the downside, quite away from yesterday's low. So if we go into a little free fall here, I'm looking at mid-range on the session at 15.5. And then, of course, your closing price, your depressed closing price of 07 even. Crude wild day yesterday, finding support in the $60 handle. Once again, 60.69, your current low, trading up 80 cents at 61.84. Gold must have been listening to our show yesterday because gold did catch a rally late in the day, clearing 1,300, but falling back now. Silver doesn't care about anything. That hardly rallied yesterday, but up 2.8 cents today at 14.80. And don't look now, but Bitcoin up 30% over the last 5 days. Bitcoin futures trading at 8,100, up $177.50. We got to bring in Triple D here, and we got to get him in a better mood.
Yeah, bad mood day.
Bad mood day.
I was biased a little bit short coming in. You know, I like the 2-day move. Figure we get follow through, a nice follow through last night, but Trump rained on that parade. And he didn't rain for the overall market, just for me, because I was playing from the short side. So scrambling to try to obviously get a little bit more longer than I am short right now. But it's going to be hard to recover from that when you come in buy a short. And, you know, I didn't heed my own warning because yesterday I said on the show that Trump will defend this market. He doesn't like the market being down. I didn't figure he's going to come out, you know, the first couple hours after the market closes after the big down day and already defend it, but that's what he's doing. So he's had I feel like a dozen tweets this morning here saying last night, yeah, there's going to be a deal, but it's got to be a good deal. So, you know, he's basically sees the market tank. This is what's going on in his head. I'm trying to play Trump's head. Sees the market going down. He's like, he doesn't want the market to go down because it's not good for him. He wants to brag about new highs. He's like, so obviously he's going to come out and try to do whatever he can to calm fears out there about this trade war. And that's what he's done this morning with, I don't know, a half dozen tweets at least here, Spencer. Read us a couple of them. I mean, he wants to do it. He wants to play hardball, but he doesn't want the market to go down when he's playing hardball. So that's why he's softening his approach all of a sudden, just because the market started going down.
You want me to actually read some? Okay.
Yeah, read some of these tweets.
That's all that matters.
It's all Trump.
I think Spencer should
taking over the market.
Tweets the entire show from 8 to 9.
We can make a deal. We can make a deal with China tomorrow before their companies start leaving, so as not to lose U.S. business. But the last time we were close, they wanted to renegotiate the deal. No way. We are in a much better position now than any deal we could have made. We'll be taking in billions of dollars and moving jobs back to the USA where they belong. This is 2 tweets now. Other countries are already negotiating with us because they don't want this to happen to them. They must be a part of U.S. action. This should have been done by our leaders many years ago. Enjoy. That's just 2 of about 7 or 8.
And this next tweet, too, it says, when the time is right, we will make a deal with China. This tweet is for the market. There's no other reason to tweet this. It's for the market saying, hey, market that was down 700 points yesterday, we're going to get a deal. It's going to be okay. That's what all these tweets are for. It's for the market. I think he should stop worrying about the market and start worrying about running the country. Let the market do what it has to do. If you're going to do a deal. But, don't just, start getting soft here, because if you want to play hardball. Don't get soft the next day because of the market going down, and don't try to help it prop it back up. Let it do what it has to do. So anyways, it's driving me nuts. As a trader, this is driving me nuts. Trying to figure out, we're going to get a deal, we're not going to get a deal, and we're waiting for the next tweet. And every tweet, he talks last night, we're down 15 points, 15 handles last night, starts talking about a deal again, and boom, we blast off. I mean, it's all Trump dependent right now. He's taken over the market.
And, what is his legacy going to be? We're coming down. I mean, November 2020, I keep talking about this, and it's not that far off here. So, I mean, I think China's like, hey, we'll just wait. The closer it gets to the election, closer it gets, the more problems he's going to have getting.
Oh, he'll have to, yeah. He's going to have to buckle.
I mean, if this is going on, even during the primaries, which when the heck do the primaries start, Spencer? You're up on this.
The campaigns are already starting, I guess you could say they've already started. But as far as the elections, that's next year.
The elections are next year,
right? But the campaigns started.
Right, campaign started, and then you got the primaries. And if this is, if this is still lingering, I think this is going to be a big target. And I don't know if
it won't be lingering that long.
You don't think so?
No, won't be lingering that long. You're going to see a deal happen sooner than you think. And unless the market starts to just rally back up, because then he can play hardball again. Market starts to sell off, he's going to try to get a deal done. It's all market dependent. Again, just like we say, the Fed says they're data dependent. They're not. They're market dependent. We saw what happened in December. They started, obviously, to go right, dovish as soon as the market started to get killed. So they can't stay data dependent. They have to get market dependent. They're watching the markets, and they're going to prop the market back up. Trump's the same thing. It's the same exact thing. He's market dependent. The market starts going down. We just saw it. I mean, the market has a bad day yesterday. He has to come out and tweet and talk about a deal. So, I mean, he's market dependent too. So if the market falls 7, 8, 10% because we're not getting a deal, he's going to come out and do a deal. Or he's going to be much more motivated to get close to getting a deal done. So I think it's heads, the market wins, tails, the market wins. It's hard to be short this market, even despite a lot of technicals breaking here. And, and it doesn't look great on the charts. If you're just talking pure technicals here, a lot of stuff is starting to look pretty darn ugly. But with that being said, every time we pull back 5 or 6 or 7% in the last couple of years, we have a Fed comment or we have something that defends the market. And, and now it's Trump defending the market here overnight. So it always seems like, the government is behind, or at least keeping the market propped up. And if we start to significantly sell off, not only will Trump try to do a deal, you'll have Fed, starting to get more dovish as well, too. So it's very hard to be short this market, at least long term.
All right, we got a good earnings report out of Cyber-Ark. So let's take a look at that.
All right, let's pivot.
Report on the right day.
Well, yeah. All right, we'll pivot away from the trade talk stuff for now and go into the individual movers. So Cyber-Ark, CYBR did report this morning Q1 adjusted EPS 56 cents versus a 41-cent estimate, sales of $95 versus $92 million. As far as the Q2 EPS guidance, that was stronger. 42 cents was the estimate. 45 to 48 cents is the range that they gave. The sales guidance also stronger by $1 to $3 million. The fiscal year EPS guidance stronger. Fiscal year sales guidance stronger. So good guidance across the board and beats on the Q1 earnings.
Reported on the right day. I'll just say it. If they would have reported yesterday morning, probably stock gets killed on this just because they were killing everything yesterday. Report on the right day. So, good job, picking the right day to report on. You're getting propped back up here. I would tell you there's massive resistance at 130, and it's probably going to come into play, but who knows in this market? You've seen funny things happen, like Roku just taking out and just blasting off through its resistance point. So I'm not playing it short out there. If I was long, I'd probably lighten up there. Near that 129, 130 area, just because there's so many resistance points. But it's hard to play stuff short when it starts getting some momentum going, because if it was to get through that 130, you'd be in breakout mode at new all-time highs.
You nailed this one, Triple D. I don't know if I need to say anything. Your former all-time high was 129.93. That was made in April. You did sprint to 131.80 in the pre-market. So some people traded some stock up there, 10,000 shares traded. So you're back down. Now you're $2 off that level. So I'm just going to stick with the 130 level. You had poked all those highs out there. Better place to exit along than to try short. Of course, above 130, it's off to the races. But for right now, trading up 691 at 128.15. Let's see how we react at all-time highs.
Jump over. There's only a couple other stocks reported. We're kind of in the lull of earnings season. We will get back into it again as the retailer is going to report later on. But we did get one retailer reported this morning here, and it's Ralph Lauren.
Yep, that was out just as the show was starting here, and it was a good one. Q4 adjusted EPS, $1.07 versus a 89-cent estimate. Sales of 1.5 versus 1.47 billion dollars. They're also raising their quarterly dividend from 62.5 cents a share to 68.75 cents a share. So a 3-cent quarterly dividend raise there. They're also adding $600 million to their buyback.
Stock pumped, but it's starting to leak here a little bit. One concern is this chart looks seriously broken. I mean, you get up to 124, 125, you have a full-on overhead supply issue. So that being said, I don't think even if the report, was better, I'm be cautious buying the stock on this report just because the technicals look completely broken on the stock. So you're going to have people who obviously bought the stock over the course of the last week or two, hoping to get their money back.
And we haven't even taken out, but we did get a spike in the pre-market where that was kind of a ridiculous spike.
Where do we just get to?
It spiked on 20,000 shares up to 126.
Yeah, and it's already leaked all that away, so I think you can forget about 126. I mean, whoever was out there, smart move, looking at this chart and saying, hey, probably going to be some overhead supply issues from a lot of people who want their money back. They couldn't even wait till the open. They couldn't wait more than, we reported what, 15 minutes ago?
Yeah.
Yeah, and we're already have given, the majority of these gains back. So caution, obviously, the report is okay. Obviously, we're up in the overall market here. So, at 120, maybe it's not that bad of a deal. But when you're going about by 125, 126 in the tape that we've been in, you're asking for trouble.
Let's deal with yesterday's high at 121.71. That's $1.71 away from where we're trading. So got to get above that. And that was right near your low from Friday as well. So there's a real good level on the upside. It does open up after that. Your two-day high comes in at 25.58. On the downside here, first thing, you don't want to go red here. You close near the low of the session, 18.28. So expect to find some support there. Yesterday's low, 17.64. That would definitely be an exit button even if you're trying to buy it at the close on a new low of the move. But decent report and still staying green. I'd be a little more comfortable instead of buying this at 121 and change. Let's see if we can clear 122 because it really opens up after that.
Let's go over.
That's pretty much the bulk of it.
No, there are a couple others. Let's go over to Take Two.
Oh yeah, last night. Yeah, I'm sorry. I was looking at this morning. Yeah, we had a few last night.
Yeah, Take Two after the bell yesterday. Numbers here. Q4 GAAP EPS was 50 cents. I don't know how that compares to the 75-cent estimate. If it is, it's a miss there. Sales 539 versus 506 million dollars, so a beat on the sales number. Their Q1 GAAP EPS guidance, they guided a range of 65 to 75 cents. And they guided around $500 million in sales for the current quarter. They also said on the call, they gave their Red Dead Redemption sales totals 24 million units, which I believe is weaker than expected.
This stock was everywhere on this report. And if this doesn't tell you, we talk a lot about on the show about if you have calls or puts, being able to use the after hours action to offset or to maybe profit from the after hours action. Anybody who has a call or a put here this morning is basically losing all their premium because the stock is flat. But last night, so if you, let's just say, and I'm just looking at the puts, you had the, say like the 99s if you had, they were going for about 350. This stock got down to what, Joel? What was it? Where did it get down to last night? Show us after hours chart.
It spiked down to 93.20.
$93. So you'd been 7 points. You doubled your money. And then it takes off and, so it spikes all the way down the initial report to $93. Then it blasts off in orbit and goes all the way up to like the almost 105. How high did we get? Like 104 and change last night.
I see 104.60 as your 104.60.
Might move here last night. 11 points. And then it sells it all the way back off. We go all the way back down the 97 handle. So, hypothetically speaking, let's just say you had the calls or the puts. You could have been making money on these, and you're going to lose it all probably, because if you're not trading after hours and trading the stock against your options, you're missing out on a lot of potential profits. Now, hindsight is 2020. You're never going to play anything perfect. But when you get the moves that are higher, or they get outsized and they get, the point where they're beyond what the straddle was pricing at, a lot of times you see that, the stock will stall at least, and sometimes reverse at those points. And that's exactly what we saw last night. So it spikes down and spikes up. But if you had the puts, so like the 99 puts, you could have been buying the stock against your puts, at like 93, locking in 6 points. And then, you've bought the stock. So then it could go all the way up. And then when it gets up to 102, 103, you could say, okay, well, I'm way above the 99 strike. I'll just sell the stock I just bought, make 10 points off that. So, I mean, there's a lot of different ways you can play these things. But, the one thing is, I'm going to stress that if you're buying options and you're not trading the stock against those options in the after hours, you're missing out on a lot of potential profit opportunities.
$8 straddle.
It was an $8 straddle. So, and that $8 pretty much gone because the thing's up 20 cents. So it was an $8 straddle. But you could have made money with it. I mean, straddles are hard to make money, period. I hate buying options. I do not hardly ever buy
You're buying
options.
2 of them.
We know I'm the anti-buy options guy. But I'm saying, there's so many people that like to trade options out there. If you're buying options and not utilizing the stock action after hours for those long options, that's the greatest asset of them, is that you can trade these things after hours with relatively, where you're locking in profits. So if you got puts, the thing falls $5-6, you want to lock it in. You can lock it in. It's way better than waiting for this, hoping the option's going to open the next day at your price down at 93, and then you do it because you let it. It's all gone. So the hypothetical, just setting it up. You got the 99 puts. Say you got one contract only. You bought for $3.50. You could throw an order out there to buy it at 94. Boom, you're filled. Okay, now I've locked in $4.50. I'm going to make money no matter what. But if the stock starts to rally hard, I still participate. And it did. And it not only rallied all the way back up, it rallied and got 4 more points in the money. So then you could just sell the stock you just bought. And now your options open again. Then the stock comes back in, and now you're participating again. I mean, there's lots of fun ways to play the yo-yo action if you have options. I don't do it because I don't buy options. I hate wasting premium. You will rarely see me buy an option. I used to do some lotto calls and puts when I thought that it was relative mispricing, like some volatility spike up happened suddenly and the market makers aren't pricing in, the sudden rise in volatility. But for the most part, I feel like buying options in the long run, you lose money.
Just consolidation right here, unchanged, up by 19 cents at 10020. I am looking here at just this 99 handle. Your last 3-6 lows, I mean, they range. You got a 99, 98.86, 99.11, 99.22. So let's see what happens in the lower 99 handle. You've had buyers there over the last 6 sessions. They're digesting the report. So let's see if those buyers appear there again. On the upside for continued follow through, 102.03 was yesterday's high. We're still below that as a target. So 99 to 102, those are some early levels in Take-Two Interactive.
And let's move over to Tencent Music, recent IPO from December. They had earnings yesterday after the close. And their Q1 adjusted earnings was 11 cents per share versus a 10-cent estimate. Sales of $855 versus $850 million. Also, the co-president has resigned. Notable, like I said, because this is a recent IPO.
You could have did the same thing on this last night that we just talked about. Also, Jazz was saying the same thing with Ralph Lauren. I mean, if you had the calls, 16 calls, and you bought them for like 75 cents yesterday, you're out of luck because these things are going to be worthless. But they were not worthless last night. This thing had a wicked little rally last night right on the number. And if you bring up that after hours chart, you'll see what I'm talking about. This thing spiked up to where? Over $17, close to 17, didn't it?
16.90.
Yeah, so it got up in the money for 90 cents, and then you had the nice earnings reversal. We've been seeing this a lot, especially in this earnings season. You've been seeing stocks rally significantly and then give it all back and then go heavy red. So, playing these earnings reversals has been just the fade trade on the earnings has really worked well. I mean, it doesn't always work. In the case of Roku, it didn't work, but in a lot of cases it has. And TME spikes up on the earnings report. But then if you're really a technical analyst, you can say, hey, everybody that's been sitting and is down in this thing is probably going to be looking to get their money back. Well, they couldn't even wait, obviously, a very long, because if you look, and it went into free fall and it collapsed, and now you're looking at the stock trading down $1.10. So just to tidy, and we actually were lower than that too. So this thing was trading up to $16.90. Now it's down to $14.90. You're talking about 15-20% ranges here. I mean, after hours, these are good moves, or 15% range. These are big moves after hours. And if you're long options, these are the way to take advantage. You have the best chance to take advantage if you're long the options. Now, again, I'm not promoting to buy options. I don't buy options, but so many people do it that I'm saying if you are doing it, then utilize this after hours action and take advantage of some of this pricing.
It's all about 1462. That's the all-time low for this issue. That was made, I believe, just off its IPO. Actually, it was 1452. I stand corrected. No, I stand corrected again. Why am I not seeing more price action in this one? Oh, I didn't have my chart out long enough. Anyways, it's not at an all-time low. What it is, it's coming into your low at 1452, 1458. That was a pair of lows in early February. So that's where the pre-market low is. That support, if not, things open up to under $14. $13.90 is your next daily low. But to see if buyers come in to rescue it at that double bottom from February.
Some of our traders like trading that BILI, Billy. I traded it last night on this report there too. So give us the numbers there. I know it comes in one, but it's always interesting.
Oh man, I gotta pull this up. Hold on 1 second here. BILI.
Billy.
Billy.
Yeah. So one was
Billy, get to the chopper. Do you know what that's from?
No, we're not gonna do that.
Somebody's gotta know what that's from.
Don't tell me. Don't tell me.
Billy, get to the chopper.
Yeah,
just with the accent, you gotta know.
Billy Madison.
No, Joel.
That's from the Commando.
Somebody in the chat help him out.
That's from Commando or whatever.
Oh, you're close. You caught the Arnold accent.
Whatever.
Predator, buy Apple, winner.
Whatever.
Predator, T-Moon guy.
All right, 6-cent loss for Billy
Apple.
versus an 11-cent loss estimate. Revenue of 204 versus 188 $1 million. So they beat on both the prints here in the first quarter.
Yeah, and the stock was trading up. Up. It was trading up, and it came back down a little bit. Now it's trading up, so a little bit of a yo-yo, but muted trading action. This one's been pretty quiet on this report. So whoever bought options on this, I don't know if they were going to make any money. I didn't look where the pricing was, but I'm assuming it was more than the 40 cents or whatever it's trading up.
Let's see here. Billy is trading up 59 cents. It's 16.80. Had a little pop over 17. Actually, a couple little pops over 17. So we'll be keeping an eye on 17.17. 17.26 is your pre-market high. Do we have any daily highs there? We got no daily highs until you get to 17.60. So take out the pre-market high. There's your next target. And there's actually 3 highs at 17.60 from Friday and then Monday and Tuesday of last week. On the downside here, let's up 59 cents. Let's see if we can stay green on this one. 16.21 was the close.
All right. Was that the bulk of the earnings, or did we miss something?
I think that's pretty much it for the earnings. We did have
tonight. We get Did we get Tilray?
We had Stoneco yesterday, didn't we? Yeah, but
that popped up.
That's pretty much it for the earnings. Tonight we have Tilray, and I think that might be it for as far as the earnings that week.
Tilray's fun.
Tomorrow morning we have Alibaba, we have Macy's, so retail is coming in.
Retail is coming
later this week. And speaking of retail, I just want to pivot here to the Walmart headline this morning because, and this isn't like the newest of news because they kind of teased it a few weeks ago, but they announced this morning that they're going to be offering free next day shipping on 229,000 items with orders of $35 or more. So a direct response here to Amazon's one-day Prime shipping headline.
So we have a trade war and we have a shipping war.
Yep.
2 wars here going on.
We also
popping on this bet.
Wait, someone just passed Joel a piece of paper. What is it? Does it say anything interesting? No?
It says, come see me and Dennis at the Benzinga Trading Summit in New York City.
Never mind.
We will. No, listen.
Does it really say that?
We will be doing the show live. So check out bcprofit.com. And also, we are going to draw.
I guess this is what we're supposed to be saying.
From the audience, someone will be interviewed on the pre-market prep show.
Okay.
A random person.
Interesting. Okay. I thought that it was like
hey, I'm fired up for
like
this.
so because yesterday Jason came over and told you about the Beeline thing. So I thought maybe today someone's coming over to give me some more news, but I guess not.
Do you want to hear my Beeline rant again?
No, I don't. Okay, wait, back to Walmart here, guys. So this is interesting because I want to talk about this in the context of Amazon and FedEx and UPS, because we know that Amazon's trying to wean themselves off of FedEx and UPS in terms of the like last mile delivery, and they're desperate for drivers here. They're desperate for drivers. There's a huge need here for these services, Walmart and Amazon, as they sort of escalate their delivery war with each other to get more drivers on the road that they control and are not through FedEx or UPS. So this is only going to get this is only the beginning really here for these two. And like the headline this morning, like I mentioned, is only for 229,000 items of orders of $35 or more. So Walmart took a punch. Now they're punching back.
We knew this was coming.
Yep, we did.
They're not going to sit there and do nothing. So you're in a shipping war here. Walmart's trading up on this news. Walmart's trading up a little bit because the overall market here too, though. So I don't think this is going to be like a game changer. It's going to blast off on this. And you got some overhead supply starting to form in our friend Walmart. But we do have earnings coming up for it too. When's Walmart due to report?
I want to say next week, but let me confirm.
Yeah, retail earnings season is coming. So Walmart's always one of the big doggies. It's going to be.
I take that back. Walmart is Thursday.
It's this week.
It is Thursday.
So you often see strength ahead of the reports. Now with the Trump market, all these little strategies that I talk about all the time are pretty much off the table because all that matters is the next tweet. But with that being said, Walmart's got some pretty good overhead supply issues too. So all about the earnings report, though. It's hard to trade something technical when it's coming in earnings.
Walmart getting a little bit of a pop here, nothing much. You do have real good support. You came off the 104 area with the market. Support 90. Well, you have a 99. I'm going to call that support. You're 63 cents away. That was Thursday's low. That was also the low from yesterday, 99.01. So I like 99 as support. And we haven't even taken out yesterday's high yet, 101.15. So you got to take that out before you get into the 102 handle. So, I mean, getting a pop off this, but man, I just was thinking shipping wars. I'm thinking, man, I wonder how FedEx and UPS are doing. Those are some scary looking charts here, Dennis. Did you see the FedEx and the UPS? They are
come down, but you're coming into support too. Like look at the FedEx. You got 168. I mean, if you're selling it now, the thing a week and a half ago was $198. So 2 weeks ago, you're selling it now at 170. You're kind of late to the party, no? Like you're coming into like that 167.61 low. You had the 169.66. I feel like you're coming into support. I feel like it's too late to sell it now. I own it. I have no intention to sell. I put it in a long-term portfolio, but I feel like it's too late to sell it now.
No, I'm just looking at it. It just the charts look weak. I'm just looking.
There's a lot of them. Like really, when you start looking at the charts, there's been some technical damage here. I mean,
what about Apple?
Held up okay, but you see the chips. Like the destruction. That Intel has just been murdered.
I know.
Murdered.
That was
AMD. It's looking like AMD's looking heavy. It's held up the best. AMD has held up the best, but it takes out 26. Katie bar the door. Nvidia's just been in collapse mode. I mean, my portfolio has been under attack. The long-term portfolio has not performed well in these last 3 weeks. But obviously, when it starts going down 5% in a week and a half, your long-term portfolio is going to take a hit if you're long only. So that's why I do trading too.
But you were talking about this before the breakdown, really. You were not having a great earning. I mean, just
my portfolio has not done well. My long-term stuff is not doing good. I got hit on a lot of stuff. I mean, half of my stuff is ETF, so I'm just going to be moving with the market. But I probably got 100 stocks in there. But I'll tell you, there's been a few. Like I had Intel, I have Nvidia. I've had quite a few. I mean, that happens. I mean, you can't be right all the time, right?
Nope, not. Oh, down
40. I wish I could. I mean, this is props again to Jeremy Newsom too. He tweeted yesterday, he had a real tough trading day, and he tweeted out every one of his losers. And I'm like, I have so much respect for that. How many people on Twitter do you follow? And he asking people out there that tweet their losers. He tweets his winners, he tweets his losers all the time. And You know what? I would totally respect that. I mean, I have a lot more respect for somebody that's tweeting a loser out there than all these people who are just telling me what their winners, because so often, I could do it all the time too. I've got 43 positions on right now. I could tell you, oh, I've got this long and this long and this long and this long, and I'm doing really well. I don't come and say that though. I got a lot of shorts that I'm not doing well. So I could cherry pick you and tell you which ones I'm making money in and not talk about the losers. That's what a lot of people do. And it's ridiculous. If you're going to talk about your winners, you got to talk about your losers too. I think I'm sometimes guilty of talking too much about my losers, and people probably think that I just lose money. But I like to complain, and I think you learn more from talking about your losers than you do your winners. I'm learning in this market all the time. I learned this is a Trump environment here, and one tweet changes everything. So you're looking here and you're thinking, oh, there's some technical damage here. There's probably going to be some follow through tomorrow, trading the close. And you think, yeah, maybe there is. But then a Trump tweet comes and that's all off the table. So you can't be trading it like that, just because when Trump comes in, everything changes.
And I think you'd have to expand the characters in Twitter for me to get all my losers in there. What is it, 140 characters? They need to expand it to a couple hundred. But
it's like 280 now.
Is it 280 now?
Whatever the number is. So it is expanded. So you have room.
What about imbalances here, Dennis? On a day
they're small. Again, you're going to see this right now. Institutions. Just imagine, put yourself in an institution's shoes. Big money. Do you want to show your hand here this early? Hell no. You don't want to show anything too early, because everybody's going to be all over you. The liquidity is going to be lower. It always is on days like this. So you're going to keep your orders tight. So we do see a few sell imbalances. We do see a few buy imbalances, but there's nothing jumping out this huge. BABA, 57,000 to buy, somewhat significant. I see a few sell imbalances. Morgan Stanley, 30,000 to sell. Procter & Gamble, careful you PG traders out there thinking that a tide lifts all ships. PG's been moving opposite to the market. PG was up yesterday. And actually, I don't know, we're selling off here a little bit. I'm going to have to do some trading here. Hang on.
Okay. All right. If you want to, we could talk about PG.
I'm getting hit on a bunch of stocks. We must be selling off.
SPOOs, they're pretty tight here. We've been
is there a catalyst here? I'm getting hit on a lot of stuff.
Let me check I have one whole screen to Trump Twitter.
No, he has not tweeted.
Let's see. Let me see. No, I'm not seeing anything. Here's it.
All right. You guys talk for 2 minutes. I got to get hedged up.
That's nothing. We neglected someone here. Jazz was asking, I think he said VIPs had earnings. I don't even know. I don't follow that stock too much. Is that correct? Is there any
VIPs?
VIPS?
Never even heard of that name.
Never even heard of it.
Let's see.
Is there any news on it? It's trading up 28 cents.
They did.
Yeah, it had earnings. Yes.
Did? Wow.
Yeah. We trade VIPs.
Yeah, it's.
We do?
I do.
Okay.
Anyways, I'm trading it.
I'll just look at it. It's trading up 28 cents. Hit a nice low yesterday, 763. That coincides with another low at 755. It's trading up 28 cents. I think real good support here. I'd probably like to try and buy it closer to that area. On the upside here, let's get over $8. Let's get over 818. That was the high from yesterday. You get over 818 and things open up to, let's call it 875, because there's five highs between 865 and 890. So that's your major resistance in that. Jazz, I'm going to get all year in Jazz because I don't want you getting upset if we don't cover your stocks here. Agilent, trading flat here. They report after the close, right, Spencer? Man, oh man, it's just leaning on its lows here, 73.23. So if you want to take a stab of it, had earnings, you're going to have some overhead supply, low the move at 73.23. Also, we got a quick question here on Uber. Let's talk Uber for a second here. And would I buy Uber? If so, at what price? I have no idea what I'd buy that. 45.5 maybe if it ever got back up there. 2 down days, gap down yesterday. Market is not helping it at all. Up $1.02 at 38.12. So if you had to twist my arm, I'd say I'd try and buy it at the close, 37.10, and then stop myself out at 36.08. You have had a 9-point move, so it's easy to do the 50% retracement. That'd be 40.5. That would take you over Friday. Well, we just dropped again. Is there a tweet? Do we have a tweet here? We just dropped another 3 handles. Nope. Anyways, yesterday's high is 39.24, gap to 41.06, and that. So still only 2 days of price action. Let's look at when we're looking at IPOs here. Let's look at Beyond Meat, and that is recovering from its. That did have its 50% retracement at 65, trying to rebound up 210 at 71.60. I will 73.20 really is your next resistance level. Also be careful. Yesterday's high right here at 71.96. So I still haven't taken out yesterday's high yet. And Beyond Meat, let's take a look at Zoom. See how that's trading. That's pulled back off its all-time high, rebounding up $1.96. Have to figure the 50% retracement on this one for a potential support area. We went basically from 60 to what, to 80? This is easy.
Trump tweet just out. China will be pumping. They're waiting for it. China will be pumping money into their system and probably reducing interest rates, as always, in order to make up for the business they are and will be losing. If the Federal Reserve ever did a match, that's in quotes, a match, it would be game over. We win. In any event, China wants a deal. I can't interpret these. I don't know. This is beyond me. But
it's all impossible. Like, I'm trying to, do the radio show. You got Trump tweeting over here. I'm getting hit on longs now because obviously I was short, so I was trying to get hedged a little bit. And as the market comes in, I'm getting hit. Now I'm long the market. I'm trying to get back short. It's really choppy. This has been, I will just say, one of the most difficult trading environments in the last week and a half that I've seen in a long time, because it's so random walk. The moves are and it's all because of, because of Trump. It's every tweet moves the market in a different direction. So it's tricky to trade when you don't know what the next tweet is going to be. And you can have the best setup in the world, and then he said something about, trades deal not going well and the market's going to tank. Or he says something about the trade deal going well and the market's going to rally. It's almost to a point of ridiculousness. That's my comments. Keep talking. Go to the ratings and stuff, but I'm going to be back as soon as I get hedged up.
Okay. I think I'm going to rate my congressman and ask him to ask Trump not to tweet during our show, because it interrupts everything. And it's very, very, or maybe Trump listens to the pre-market prep show and he just wants to mess us up a little bit. What do you think?
At this point, I don't know.
Who's in the chat? Come on. Who's Trump in the chat?
Yeah, that's funny. That's funny. Wait, so you were in the middle of Zoom, weren't you? Before that?
Yeah, and I lost my train of thought here.
Okay.
That's easy to do. Let's see. So you went to 60 basically to 81, right? Is that the all-time high? So 21, let's call it 10 and a half. 70 and a half is support. That's a 50% retracement. Yesterday's low, 70.60. Wow, I wish I would have been looking at this yesterday. So there you go. There's your support. Also had another low just under that, 69.59. So we'll see. We'll see how that holds up. S&Ps did take a little dip. We're still up 16 handles on the session. Boom.
If you want, we can go to ratings, because we do have a number of interesting. It's been quiet on the ratings front, I feel like, for a few weeks.
Talk before we do that? Can we just talk about Apple for a second here?
Yeah. Had that lawsuit headline yesterday.
Yeah. Yep. What do you have the what is it about the App Store?
Yeah, the lawsuit is proceeding. The lawsuit against the App Store is proceeding.
Okay.
So as far as antitrust concerns.
Okay. Well, I'm not going to go into a lot of detail on this today. But our guest tomorrow will, and that will be Gene Muster of Loop Ventures. Yep, Gene will be joining us here. And his note yesterday, Apple versus Pepper opens door for a lawsuit that Apple will likely win. So that's just his opinion. He's pretty good on following these stocks. I also suggest that if you guys have not been to loopventures.com, he sends out these daily notes that are unbelievable, covering the hot news and the hot topics. So he a little bit overblown there. It got crushed yesterday, only rebounding up 88 cents. But if this takes any time as long as the Qualcomm lawsuit, we probably won't know for a couple years on this one. But let's see here. S&Ps, we're trying to climb back. Still up 16 and a quarter, 16 handles at 28.23. Don't see any support until mid-range on the session. That comes in at 28.16. So if you're looking for if you're short, looking for a potential cover, we'll see what happens at 28.16. All right, Spencer.
All right, let's move on to some ratings here because we got some interesting ones as we sort of move out of earnings season and the analysts aren't quite chasing the earnings headlines. So just today,
how would you like to be an analyst in this market?
I wouldn't.
Huh.
So today we have, let me go through my list here. Coca-Cola is getting an upgrade from Morgan Stanley to overweight.
Let's see here. It was faded off its earnings. I remember even faded that day. I don't know. Came back down. Let's see, up 35 cents. That's a pretty big move for Coca-Cola. What do we got? We got a good resistance level, and that good resistance level is, well, we're trading above it. I would say sellers at 48.30. 2-day high 48.30. 4-day high 48.23. 5-day high 48.29. So opening into resistance, we'll see there could be some paper at 48.5 or 48.61. So if you're buying Coke up 35 cents here, just be cognizant you're running into a couple daily highs. Pretty safe call. I mean, Coke.
Yeah,
exactly. Right.
Some interesting downgrades this morning. JP Morgan is downgrading DE to underweight. And I think this is ahead of earnings, or do they just report?
I'm not sure, but boy, oh boy, you talk about kicking a dog when he's down. Look at that day from yesterday.
Gary's next week, I think.
Yeah. And now, I don't know. I mean, let's see if is there any kind of volume with this this move here? Let me take
I think so.
5,729 shares. I mean, it's not a real heavily traded stock, but I'm sure it's offered down. Well, let's see, 145.18. That was yesterday's low. So now we're below that. I will call that resistance for now. 146.28. I'm sure a lot of people would like to see that closing price. Boy, yesterday's high, 156.05. So, this stock and Deere, and what about Cat? Did Cat get hit yesterday too? Boy,
well, they all got hit yesterday.
Yeah, everything got hit. But man, oh man, lows of the move, kicking a dog when it's down. Cat is trading up here. I'm not sure if that's just an odd lot or something. Let's see what the Cat is doing. 6,000 shares. So Cat and Deere going in opposite directions.
Shopify has now gotten a downgrade 2 days in a row.
Ooh,
yep. There was a downgrade yesterday from Guggenheim, downgrade today from Morgan Stanley to sell or underweight. Same thing.
I don't know. The stock just keeps ripping everyone's face off. Had supported 255. You were right there. 255, 54.70, 54.12. You finally broke down on Friday, 52.64. Broke down again here. You're trading at what? 46 even here. So, 45 even. Yesterday's low was 45.62. So let's get above that and you have a chance to rally. 45.5 was another low that you had on May 2nd. Problem is, it just gets real scary underneath that 45.5. I don't see a daily level to lean on until 237.39. So let's see if we can get off the mat and get off the mat quickly. If, in fact, you ever see this thing back up at 254, 255, all kinds of resistance there. Unfortunately, that's $10 away for the longs.
Have you been following Jumia Technologies, JMIA, the African e-commerce site? They're getting a couple upgrades this morning here. Raymond James and Berenberg both upgrading JMIA to outperform/buy here. We also had a Morgan Stanley maintaining their sell, so go figure. But this one, this has been one of those recent IPOs. This one's been mover.
All right, got hit on Friday, and did it match? Or let's see what it did. Its all-time low was 18.26. On Friday, you got to 18.13. You're $10 above that now. Holy Toledo. Let's see. I'll just look at the pre-market trading. 28.30. Just seems to be a little bit of a seller there. So Nothing major, 28.30. I'll call that resistance just from the pre-market trading. Did get a print at 28.70. So, all right, I'll bump it up 28.5. Daily levels, you have nothing there. Nothing on the dailies. The next daily high is 32.91. But since you had all those days straight down action since 45, I don't expect it to see 32.91 today. Let's first things first. Let's try and get through the pre-market high. I want to cover a couple stocks in the chat here.
I'm back too, so
yeah,
hiding in the background. I'm kind of hedged here now, so
whatever you want to do. I'm going to do.
No, I'm good.
Okay.
This alert. We got real traders on this show.
Trade desk, Dennis, up 249, got cranked after earnings, but it couldn't get into its last gap from earnings. So for me, the main level 173.50. You hit that on February 20th.
Oh, that's a great level.
And 173.50. Yep. But now you're $6 away from it.
You know what? I've been starting to, and we can go back to the chat stocks in a second here, but I started nibbling a little more in my portfolio there too. I bought my Qualcomm back, and I know I obviously sold too soon, and then I bought it back. But he's trying to pick on stocks that you think if this market goes to turn, these are going to be the first ones to rally. I feel like the Qualcomm, and I bought it yesterday at $84, so in just longer term.
Wow.
Not necessarily a swing trade, but just looking and saying, hey, if this market does start to turn around, I think the Qualcomms, I think the Disneys, I think the trade desks too. Like you've got that nice level there, when you're looking at that thing, a 173.60. And, in long term, I don't know. But, short term, some of these things are just getting to be a point of oversold. And sometimes they just go right to where they found a floor before, and that's where they bounce. And, it appears to have done that yesterday. So maybe we bounce there again.
Yeah, that's it's a nice pullback, and man, I think it was ugly off earnings, so we'll keep an eye on this one. Trading up 249. I mean, the problem with this one, if you didn't cover your short over the last 3 days, and now you're getting it got an upgrade to it. Did it get an upgrade, or someone was just asking about it in the chat. I mean, I don't know. I mean, your 2-day high is it? Well, you got to take out yesterday's high at 81.52. But then it opens up $10 to 192.67. So just like there was air yesterday, on the way down, I mean, could have the same now, though people are a little more likely to step out and sell when the market is ripping up as opposed to buying sticking out straight bids when the market's going down. But we'll see what happens. And Dennis, that's a brave move, man, to sell that thing and buy it back like that. I mean, that's good conviction. And
we don't know. We'll find out. Maybe it's a dumb move, but I don't think I'm getting it back at $70. So I'm paying up a little bit. I think this could move to 100 eventually. I think all I'm saying is this has held up fairly well. I think if the market goes to turn, this is going to be one of the first ones that rallies. So I'm positioning myself, just getting a few stocks that I feel like if the market does turn back up. And I'm not saying I'm getting full bullish here. I'm just saying this is showing enough relative strength that it makes me interested. And obviously I bought some because of that.
Just a couple tips on some stocks I was looking at yesterday, and I was looking on days like this. You like to see the relative strength of stocks, and two big stocks stuck out to me. You want a level of levels? Take a look at Berkshire Hathaway and take a look at the 204.30 area. Your low on Friday was 04.31, and all this carnage yesterday, it got to 204.30. Thursday's low 204.31. So there, excellent triple bottom lean on, trading up 97 cents. So excellent relative strength from Warren yesterday. And the other stock to me that showed some relative strength was Johnson & was it Johnson & Johnson? Well, that did take out. I'm looking at the wrong stock.
They were playing defense. So you had stocks like Procter & Gamble that were actually green yesterday. So these stocks don't necessarily, perform that well if the market goes to turn. So what's one thing to look at relative strength, but you got to understand your sector too. I mean, Procter & Gamble is going to show relative strength right now. J&J is probably going to show some relative strength because they're lower beta, they're defensive names. These stocks can sometimes rise when other stocks are going down. I think PG was the only stock in the Dow that was up yesterday. So, and there's a reason. That's flight to playing defense. So that doesn't mean it's going to be the first one that rises when the market goes to turn, though. So you got to be cautious about that. It just means that's, it's not like like the Qualcomm scenario, which is moving with the market. This can move counter to the market. So just because the stock is holding up well doesn't mean when the market blasts off, it's really going to go. PG would probably do the opposite and start to show weakness if the market starts to actually rally.
Johnny in the chat, Google chat is pointing out UNH was super strong. And, just look at it. That stock has been super weak, right? Relatively. So, buying weaker stocks, maybe get a little bit, maybe all the sellers are out, but this one had its big wild ride after earnings. It's trading up $1.45 at 241. And let's keep an eye on 240.81 and 243.15. Actually, 243.15 is the big number because I believe that's the day it opened up. That it's at the earnings move, though that was after earnings. Let's see what happens. 243.15 in UNH. And Twilio, one more. I saw you going for it, Spencer. Let's look at Twilio. Big down day yesterday, getting some of it back, man. This is a tough chart here. Didn't quite get to your low at 121.53. I don't know. I can't help you on Twilio. Dennis, any thoughts on TWLO?
Same thing. This is a stock that was, obviously one of the best performers of the year. It's been straight up. It's starting to look broken here a little bit, which is a concern. A lot of things do. I mean, if we get a deal, this is one that's going to rally the hardest, though. Beta's like twice as much as the market. So if not, even sometimes 3 times as much. But you're coming into some major support. You get down at 118, 119. You probably get a bounce there, but this is moving with the overall market. So again, a lot of these charts do look broken, though, so just caution to people who are just coming in here and just buying. I mean, it's one thing to nibble in your long-term invest portfolio. It's another thing to say, okay, the bottom's in. Because one tweet, that the deal's not going well, and we could be down another 500 points in the blink of an eye. So, I'm not taking any swing trades here, just positioning my portfolio a little bit different in case, we do get a deal. That's all. So a stock like this will rally if we get a deal. But, if this gets prolonged, a lot of these charts are starting to look broken. So just you got to be careful out here.
All
right. There was a couple more ratings I wanted to mention real quickly. Tyson Foods getting a pair of upgrades this morning. Argus and Credit Suisse both upgrading TSN to buy or outperform, whatever the equivalent is there. And Fizz, which is one we haven't discussed for a while, Fizz getting initiated at Jefferies at underperform. So those are two that kind of caught my eye this morning. Tyson
Fizzing out.
Yeah,
Joel.
Yeah, it's giving back a good portion of those gains.
Yeah, well, this stock was so hot there last year, and you can remember the run up to 120, 130, and it's fizzed out. So I'll say it again. We used the pun twice, but I mean, there's no other way to say it. You went from 2015 down to $20. You ran to 2016 to 40, then he went to 60 based in 2017, and then he went parabolic in the middle of 2017 up to $120. It's got overdone. Eventually it gets to a point, maybe it's got some value. I've never sat down and done a fundamental analysis on this, so I can't tell you that. I can just say the weak get weaker in this environment. This stock has been weak all year. So it's not the kind of stock that's going to bounce right back when the market bounces back, because this stock has a significant amount of overhead supply.
I think you find a little bit underneath demand too. I mean, you had that spike low at 50.53 after earnings, and you did try to recover, peeled back again to 52.15. So I thought those are two support levels I keep an eye on, 52.15, and then the low of the move at 50.53. And actually, you're still, I can't say really through support yet, because your last three lows have been right at 54, 54.09, 54.40, and 54.12. Is it offered there, Dennis, or as wide as
Well, it's down. It's got initiated at underperform here, so it's offered at 53.95. When you get initiated underperformance, Jefferies,
yep.
That's going to knock 2-3% off the price. So there's somebody offering 53.95. It's not going to let. I would think this trades down into the 52 handle today on this, unless the market really rips, and that can help it out. I would think this trades down to the 52 handle. I think you're going to challenge that low of the move. Just going, from the Stat-Arp stuff that I do on ratings, 52.15 was the low April 15th. I think you're going to challenge that today.
You do have a question here about Square, and man, that thing is just not looking.
I want to buy it.
Yeah.
I do want to buy this, and I haven't yet. I've got it on my shopping list. It's a significant sell-off, and this has been a stock that's been out of favor. We know since the earnings report, it hasn't really been performing that well. It's kind of in a free fall right now, so there's no reason to be a hero here, but I'm waiting for like a double bottom or something. Give me a reason here. I still think this is a good story. I think this is going to be a $100 stock here eventually, as long as the market holds up and we start to move back to highs. But, I think that's a ways out here now. Stock is massively out of favor right now, so you have to consider that too. But this is on my shopping list. I want to buy it. I haven't struck yet. I'd love to get in the 50s. I don't know if it gets there.
And you're thinking about Bitcoin too. This is kind of a secondary Bitcoin play that really.
I don't think it is, though. And they were saying that last year. I don't really think it is. This is just a growth play. I mean, this thing's growing, 30-40% a year still? It's growing like crazy. You're seeing these terminals pop up all over the place here. I'm a believer in the Square story. It's always been a valuation issue for me. But, analyst estimates in 2021 are starting to be like $1.50 a share. So you start to get to a point where, if they start making $2 a share 2-3 years out, it's not, valuation isn't crazy anymore. If they're still growing significantly, maybe they can actually grow into that. So, we know MasterCard, Visa trade with a PE, and this is really the long term. You look at where is it going to be? Long-term valuation's probably going to trade 25, 30 times. I mean, MasterCard's trading 40 times and 33. Just say 30 times. So if you could get that stock to make $2 a share eventually, 30 times, it'd be, you're at $60 right there. But, that's what, not considering any growth. So the thing is still growing. So I think in the 50s, I think it's a good price. It's still a valuation issue for me. I haven't struck yet. It is on my list to buy, though.
Square was one of those plays where people thought that blockchain could be of use there, though they didn't know how. It was like spitballing, like they could potentially find a way to use blockchain. And I bring that up just because I saw a tweet come through my timeline this morning that Kathy Bessent, she is the CTO of Bank of America, said that at Bank of America, at least, they have yet to find blockchain uses for financial services. So all that hype about blockchain revolutionizing financial services and the way money changes hands, not happening yet.
I don't get it. I've never got the story, though. That's
not happening yet, but TBD.
S&P's on the rebound. We are basically back where we were at before the Trump tweet here at 25.50, up a solid 18 and a half handles here. So kind of tweet negated here. Someone mentioned this in the Google chat too, that they were looking at 28.31. 28.31.50 is your pre-market high. I don't think we're out of the woods in this by any means until we take out that intraday high from yesterday at 28.37.75. So that, to me, that is the important level to keep an eye on here. Spencer, 2 minutes left.
Sure, yeah. Well, just about wrapping up for the show today. Do you want to mention, as I've been mentioning every day and will mention every day for the next month or so, the Benzinga Trading Summit coming up June 20th in New York City. Go to bzprofit.com, enter the promo code PMP15. That gets you 15% off your ticket. If you don't know what's going on there, myself, Joel, Dennis will be there. And it'll basically be I think a longer, more organized version of our show, at least the part with Joel and Dennis. And they're going to get a lot more time to really elaborate on their strategies and not just kind of jump around and go stock to stock and react to Trump tweets. There really won't be any of that.
I think we're going to be in that trading room, right? So I'm planning on, doing a lot of different education, talking data, talking, different relationship-based trading. But the majority of my trading is very different from what you're going to probably see a lot of, and what it's not necessarily what's up Benzinga, but it's a lot different from, just technicals. And we talk technicals a lot on the show, but, I've broken down before and say, I would use one chart. And technicals are one tool in my toolbox, but it's not. I'm a relationship-based trader. I am buying something usually because something else is up, or I am buying something because, or I'm buying stocks because the market is up. I'm trading, stat arb, I'm trading index arb, and I'm trading it, with a spin on it all. I do the ratings, I trade them and I know what a rating is worth, like when you bring up Fizz and I see downgrade Jeffries, it's just because I've been in the game for 20 years. You got to feel for what something is worth. So I can price and say, hey, National Beverage with Jeffries Sal on it today is probably worth at least $1.50 down. So if I could get short at 53.95, like this participant probably is trying to do in the pre-market, I'd probably make money on that trade. And if I can cover down at 52 or 52 and a half, then that's you're just trading that, that
scenario.
Yeah, that inefficiency, the inefficiency that somebody isn't pricing it the way I feel it should be priced. I trade a lot of news, and that's all off inefficiencies as well. Just trading, hey, this is based off of this, and other things being equal, it usually will make it do this. Right. So all it is just numbers and being out there and being in the game for 20 years, you get a feel for what something is worth. So I'm just trading those basic, statistical arbitrage strategies and relationship-based trading against each other all the time.
Right. So. And so my point was, if you want, like, this will be
this stuff.
Right. This will be probably the most in-depth explanation you'll get of Dennis's strategy and kind of how he approaches the market on a daily basis. Unless you want to, pay him to come to your house and teach you.
And I don't do that. So I've had a lot of questions. A lot of people over the years, say, do you meant? I don't, because I don't have time.
Right.
So, I got 2 kids. I got a 1-year-old. I got she just turned 2.
Right.
4-year-old, and I trade, 50 hours a week. And you say, how can you trade 50 hours a week? Well, I trade after hours of pre-market, so I trade more than your average bear. So I'm just busy. I just don't. So maybe if I retire from trading, I could do some mentoring and stuff, but I don't do it just because I don't have the time for it. So I plan on coming out and talking education for 6 to 8 hours that day. So if you want to come out and hear me do some talking, come on out.
And
I'd love to meet some people. Some of you guys in the chat are awesome.
Dennis doesn't get out.
I'd love to meet you guys.
Yeah, Dennis, you're gonna have to maybe go shopping for some new clothes or something. You haven't.
I'll be there in my pajama bottoms and my ball cap.
Just one other thing I wanted to mention, and this event, is for our chatters and for our traders. But Dennis, you'll get a kick out of this. A young lady, I'm not sure how old she is, called in a few days ago, and she asked if both you and I were going to be at the event. And Neil said, yeah, of course. And she said, well, she wants to bring her 13-year-old kid because she wants her kid to meet us. So, if you have youngsters, take them out of school for the day. I mean, you won't get any better education in the markets, not just necessarily trading, but investing. So I thought you'd get a kick out of that. Someone wants to bring their 13-year-old kid probably just to meet you, the superstar of trading there. So, it should be fun.
Yeah, it'll be a lot of fun. So again, bzprofit.com, promo code PMP15 will get you 15% off your ticket. On that note, thanks everyone who joined us today.
So Disney's getting a big pop here right now too, by the way.
I don't even have my thing up. Okay,
it's good for me and you, Spencer. Remember, we bought it. We're back to even because I bought it like 133.
There we go. So this is
all kinds of Disney headlines here in the last.
Yeah, but Trump said
no,
going to
it's
Disney
not.
World.
This has long been rumored. The Disney Comcast deal. Disney is buying the Comcast's Hulu stake from them. So Disney now assumes the entirety. They own, I think, all of Hulu, as Comcast has divested that investment onto Disney. That's the biggest.
Comcast ownership on saying on CNBC will not fall below 21%, so they're still going to own a stake.
Okay, well, Disney
buying a chunk of it.
Disney just buying more Hulu than so they own like 80% of Hulu now, and I guess Comcast owns the rest. So there's your Disney headline. On that note, like I said, thanks to everyone in our chats who joined us today, both on YouTube and premarket.benzinga.com. Please remember, all the information from our show is for informational purposes only, not meant to be investing advice. Hope you all have a good rest of your day. Good luck trading, and we will see you on Wednesday.